Hello, it's Adil bringing you a review of the FTSE 100 from an intermarket analysis perspective for the weekend or week commencing from the 17th of November 2014. Okay, now I've already done my analysis on the US market, so I think it is very important for you to obviously go through that first before attempting to understand or attempting to listen or attempting to gain an insight from my FTSE 100 analysis and obviously European market analysis that will be coming shortly. Okay, as we all know, the US markets sneeze and we all catch pneumonia. They dictate the movements in global markets. It is a relay race, which I always teach my students. So we have three continents and basically or three time zones that are very important: Asia, Europe, and obviously US. And it's like a relay race. They pass the baton from one zone to another. Okay, just like the Olympics. Okay, and sometimes the baton is classed as a risk-on baton, and sometimes it's a risk-off baton. Okay, and our job obviously is to differentiate between that. Once you differentiate whether the market's in a risk-on or risk-off mode, then everything else generally tends to become easy because technicals. Let's be honest with you, it doesn't take a genius to understand technical analysis. It is very simple. Well, not very simple, but it is pretty straightforward. All they are a few horizontal and diagonal trend lines that you have to draw, and off you go. I mean, people make it out to be some sort of art or science. I mean, if you want to go under Elliott wave analysis, then obviously that's a subjective science. And from my perspective, you can project anything using Elliott wave. There's no real, even them Elliott wave technicians themselves have arguments between themselves. So there's no real consensus there. As any science is always subjective from my perspective. Even technical analysis can be subjective at times depending on how you draw a trend line. I mean, take this chart for you in front of you, for example. I mean, I could take the pivot high from here, okay, rather than ignoring this pivot high. I could then connect this pivot high to this pivot high and utilize that as a diagonal trend line resistance. Therefore, I would presume that the market is no longer at resistance. If I were to take the pivot high and connect it to this pivot high and connect it to these pivot highs in order to get a trend line that's more accurate and more respecting of price action, then that obviously indicates the market's into resistance. Okay, so it's all subjective. Everything is subjective. Now I could take this pivot low here, I could ignore this pivot low and obviously utilize this pivot low, which I haven't, and it's more conducive to the current price action at present, and it's being more obedient. If it breaks out of this, then obviously I'll assume that the market has broken, and therefore I will go into the bearish bias. So everything is subjective to a large extent. Even understanding news flow can be subjective. Understanding technical analysis can be subjective. That's why it's very, very important for you to understand cross-market analysis, i.e. intermarket analysis, to reduce the noise. This is all noise, really. The more filters you have, just like an air purifier, it has several filters before, obviously, it gets rid of all the toxins and all the stuff that is not obviously healthy for us to breathe or inhale or exhale, and obviously makes the air, but purifies the air. So same thing with regards to this technical analysis and intermarket analysis and fundamental analysis. These are all filters in order to reduce the noise. The more noise you reduce, the easier it will become for you to understand and identify risk on, risk off. That is the holy grail, folks. Okay, understanding when the market switches from a risk on bias to a risk off bias. Then you can short anything, then you can go long anything. Okay, everything else generally tends to become easy. Okay, so and this is where a lot of individuals, unfortunately 95% of traders, get stuck in the noise. They get stuck in the filter, basically. They never make it through on the other side. Okay, that's the way in which I will explain. This is why I've been doing what I've been doing for almost 10 plus years and nailing on average 200 points a week. Last week was a very good week with 280 points in total, 270 to 280 points in total. So it was a good week. Okay, no complaints. The week before was a decent week. Okay, so this is all part and parcel of trading, folks. Okay, and trying to understand the markets. Okay, my rant over. Let's get on with understanding the markets now. Okay, so with regards to fundamentals, as you all know, I always incorporate fundamentals into my analysis, and I have explained it already on the US market analysis. So the understanding there will be the yen pairs. Okay, so watch the Nikkei, watch the Shanghai, very important. Okay, the Shanghai and the Hang Seng obviously have been on a spectacular run. Why? Because of the interconnect, okay, and the fact that they're actually giving a capital tax gain waiver as well, which is encouraging them to purchase equities. So the Hang Seng obviously has been doing spectacular. Shanghai, although it was negative on Friday with weak data, so that's something to observe. Okay, and the Nikkei, as we all know, has been blasting higher, although it is now coming into potential resistance, which I'll discuss very shortly. Okay, now these are where you are. Okay, so where did the FTSE close? Let's just have a look at the FTSE. FTSE closed plus 18 points based on my Reuters icon platform. Okay, it's 6654. The gainers we don't have. Top performers was Agreco, Petrofac, Aberdeen Asset Management. The losers, SAB, Miller, AstraZeneca. That's going to be very interesting, by the way. And I'll come on to AstraZeneca in with regards to the pharmaceuticals later on. Okay, Intertech Group, so they're the top 3 worst performers, top 3 top performers, as we already know. Okay, right, so where do we go from here? So now that we know what's happening with regards to the overview, so we've basically 6654. So remember 6654 when we come on to TA analysis. Okay, so Friday, as you know, the market's like a goldfish. It basically only registers the most recent trading data or information in order to gauge sentiment and momentum in the markets. Okay, and it generally tends to forget the previous news unless it's obviously it impacts the market to a large extent. Okay, so and has a major impact, so a high degree impact, such as obviously tapering, QE, geopolitics, etc. So basically, what the summation in my previous US video, we have ISIS situation brewing again. Okay, we've got some more reports over the weekend about some hostages being beheaded, etc. So that's come back into the limelight. We've had a video from that absolute nutter, imbecile, moron. As you all know, I've explained my hatred towards that type of Wahhabi polluted Islam that is concocted in a lab. Okay, and it's not the true orthodox religion, that true teachings of Islam. Unfortunately, it's a shame. Okay, I myself am a Muslim, and I am an orthodox Sunni Muslim and a traditional Sufi Muslim. So we respect all, we honor all, we follow the teachings of Rumi. He was a famous poet in the West, as if you do some research on Rumi, very, very famous poet. Okay, we have a Sufi tradition, so we follow embrace love, harmony, peace, tranquility, and that's what the teachings of my spiritual master and obviously my mentor as well, that helps my psychological state in trading. Okay, so always be positive, respect kith and kin, regardless of what religion they are. Respect human beings for who they are, because they're all God's creation. Honor and respect your sisters, your mothers, your daughters. It doesn't really matter who it is. We're all God's creation. Adam and Eve, that's where we all came from. We didn't come from anywhere else, so we have to respect one another. Okay, what these individuals are doing, it's sickening, and really at the end of the day, it's all about oil. That's all it's about. Okay, nothing else. You can argue whatever you want. Okay, it's all about oil. Okay, that's all they care about, pillaging the resources of a nation. Obviously gold, when it was gold, it happened then. Look at history, it's always been greed. It's nothing to do with religion. It's all about greed. World War One, World War Two, was it to do with religion? No, it wasn't. It was all about greed. That's all it was. Greed and the self-aggrandizement and the obsession with man. Okay, and their lower state. So that's the situation that we find ourselves in. Okay. Now, bear with me 1 second. Okay, so that's basically what we find situation that we find ourselves in. Okay, so geopolitics, Russia, Ukraine, Mr. Putin has left early. Okay, so therefore that's negative for the market. Okay, and given the fact that he was lambasted, he was blasted, and basically they are very unhappy with his situation, his troop movements in Ukraine. So again, that's come back to the forefront. So geopolitics, ISIS plus Ukraine, very bad. Okay, from that perspective, that should technically help oil. And whether or not that's positive or negative for the FTSE, we'll soon find out. Okay, but for now, geopolitics always dictate, and that generally tends to turn sentiment sour, and bias remains negative. Okay, from geopolitical standpoint. Then we have the yen pairs. Okay, now the situation in regards to Japan, that's certainly wearing off. USD JPY, Euro JPY blasting higher. It's no longer having the desired effect that everybody expected. Okay. And the Nikkei moving higher is not having that desired effect as well. In my US market analysis, I do point to the fact that that is now coming at resistance and the yen is coming into support. Therefore, watch out for a potential reversal. Okay, especially with GDP data out this week and BOJ, etc. And also talk about the yen, obviously depreciating too fast. So they'll have to. I mean, we've had quite almost 1,000 pip move now. So I think that that impact itself is wearing off. So I've explained that in my US market analysis. Have a look at the situation there. Okay, and also I've also pointed out that the US markets have been going higher with a higher dollar. The dollar is now into resistance, therefore expect the same move lower for the US markets. So the US markets and resistance, this will be dictating resistance as well. Okay, from that perspective. Now also the data that came out, retail sales, again tapering phase. Watch out for that. Even though import prices were lower, but that's generally due to the fact that oil prices are lower, and really it's a commodity phenomenon as opposed to obviously a deflation scenario. Okay, so just bear that in mind. Again, economics, fundamentals, I'm not going to go into it too deep because I do have an economics degree, and if I were to go into it too deep, it would go over everybody's head. And as trading, you should try and keep trading as simple as you can. Okay, they say analysis paralysis. Okay, so obviously always be careful with regards to that. Now, economic data. The data on Friday from Germany, obviously, is not as strong as everybody expected it to be or would like it to be. Also, Italy is a real concern. Okay, so that has had a negative impact on Europe, and Europe seems to be lagging. Okay, and I'll do a separate analysis on the European markets, and you'll understand from that perspective. Okay, the main concern that we have, because we're focusing on the FTSE 100, is the construction output data that came out. It was very negative. Okay. It came in at 1.8% and 3.5%, which wasn't very good. Okay, that's not exactly what we were expecting. Okay, so that's come out negative. So weak economic data has a negative impact on the market, and that's exactly what we're looking towards. Even though Mr. Carney has been bearish in terms of the sterling. Okay, I know Mr. Carney has been very, very dovish. Okay, with regards to inflation expectations, and real wages have started to grow. That itself hasn't really propelled the FTSE higher, and as you all know, the FTSE is dependent upon the US markets and European markets, and they are now indicating lower, therefore the FTSE will move lower. Okay, so very, very important to understand it from that perspective. So geopolitics and socioeconomics will certainly send this market lower. Okay, I think that covers that from a fundamental perspective, and all eyes on the sterling as well. So keep an eye on sterling going into this week. Okay, so if I were to bring up a daily chart, as you can see here, it's been plastered. From my perspective, you are putting in a potential bottoming tail in sterling, so watch out for that. See that bottoming tail? So given the fact that that's a bottoming tail and the US dollar is now coming into resistance, which I've already explained in my US market analysis, okay, then that means that sterling will start to move higher, dollar will start to move lower. And what does that mean for UK exports? Okay, negative. Okay, what do you think? What will happen with the FTSE 250 and the AIM FTSE All Share AIM Index? Negative. Okay, and what will happen to the FTSE 100? Negative. So that in itself will be a negative impact. So, given the fact that you've got a bottoming tail on the daily chart for sterling, is certainly given the fact that there's an inverse relationship. Okay, with regards to that, on a 4-hour chart, you can see a bullish engulfing candle after the bottoming tail. And a 60-minute chart, you can see inverted head and shoulders formation. Okay, so I will be going long sterling on my fundamental analysis. Okay, fundamental analysis service. So those of you who want to join my fundamental analysis service, send me an email, give me a mobile number, I'll add you to the list for free. The fundamental analysis service is for free. The day trading or day live analysis service I charge £50 a month for. And the 10-minute chart, you can see inverted head and shoulders. So if there's an inverted head and shoulders in sterling, what do you think will happen to the FTSE? The exact opposite. Okay, because of the inverse relationship or inverse nature. Okay, so you can see the US markets are weak. You can see the yen is starting to come into support. The dollar is into resistance. You can see that we've had weak economic data. You know, there's geopolitics and socioeconomics now being a real concern. Bias is bearish, folks. Okay, so now that I've gone over intermarket analysis, I've gone over fundamental analysis. The last is left is TA. Okay, TA generally tends to be easiest. Okay, once you have the bias, then TA generally tends to point in that direction anyway. Okay, just confirms your thought process. Okay, so basically we have an inverted head and shoulders. We've had quite a substantial run. Okay, we are approaching the 75% fib resistance. You can argue that we are approaching the 200 MA, so we're approaching resistance. Okay, so on the daily chart for the FTSE 100. Now, yes, the inverted head and shoulders target is 6770. Well, we'll come on to that when we need to, but for now, there's no harm in a pullback for the FTSE down to 6500, probably 6450, even retest the inverted head and shoulders formation. Okay, now next chart we're going to need to look at is the FTSE AIM All Share Index. This is an index I observe. You can see here has been bearish now for a few days, so it's already confirming it's leading, not lagging. So it's leading just like the semiconductors and the biotechs lead. It's leading and indicating resistance and weakness for you. Okay, ahead. Okay. Right, the next chart that we go look at is going to be the FTSE 350. FTSE 350 again inverted head and shoulders formation. One can argue again it's into the fib. So if we take the pivot high from here, which has been the main pivot high, we're into the 75% fib and near the 200 MA. So therefore resistance. Okay, let's have a look at the FTSE 250, which is probably the most important, and you'll see there as well that we are into resistance. Now bear in mind the 250 is more reliant upon the sterling. And as you can see here, we are coming up to this diagonal trendline resistance, and we're approaching the 200 MA as well. So we're looking for a potential pullback before we. I mean, yes, we are ultimately going to go to that 200 MA, given the fact that Mr. Abe and Kuroda have done their QE blitz and surprised the markets. But there's no harm in a pullback given geopolitics and socio-economic concerns. Okay, and BTFD, buy the effing dip. Okay. Right, so with regards to the charts or intraday charts now of the FTSE 100, 60-minute chart, you can see that we have got this rising contracting wedge, which is a bearish pattern. Okay, you've got an unfilled gap below, which again 6450 will be the target this week for the FTSE 100. Okay, now 10-minute chart, you can see again diagonal trendline resistance. Okay, so watch and observe for that. We had an inverted head and shoulders pattern here intraday. This is quite important. This is one of the reasons why I went long. You can see here left shoulder, head. And then you've got the right shoulder. The head was 6610, 6635. So you can look at a 20-point move here. So 6655 basically more or less is the inverted head and shoulders target. So whenever an inverted head and shoulders target is complete, the short covering is over. Therefore, expect a long squeeze and a reversal in the opposite direction. Okay, so diagonal trendline resistance, inverted head and shoulders target hit. Okay, therefore resistance. Okay, so and the main chart, like I said, is focused on this rising contracting wedge pattern, which is always a bearish sign, especially when you have an unfilled gap below that remains open, and that will always act as a magnet for price action to close. So 6450 will be my swing short target this week. Okay, now what will negate that or negate this analysis? Obviously, with the USD JPY, Euro JPY breaking out and going to the moon, doing an Apollo 13 mission. Okay. And obviously the Nikkei and the Shanghai and the Hang Seng continuing to move higher, then obviously the whole game changes. And then we obviously have the switch bias. We're fluid traders. We're not obviously going to remain adamant or stubborn with our opinion. And we're very, very flexible. And I'm a day trader. I'll be more than happy to switch my bias. Okay, folks. So risk on, risk off, wax on, wax off. That's enough for